Gentlemen, welcome back. Welcome back to Migtown Money. This, of course, is the only MGTOW channel dedicated to your financial freedom, helping you with practical ideas to achieve financial independence. Today's topic is going to be how you can stop being an investment sucker. This is sort of a part two of a video that I did several videos ago regarding financial money myths, and I'll put a link to that video, of course, in the description. Before we get to that, though, for those of you new to this channel, let me set the table. Let me give a description of what you're listening to. This is MGTOW 2.0. This is the second wave of MGTOW. This is not a theoretical MGTOW I don't like women channel. This is about actionable, practical ideas that you can use to make money, how you can achieve financial independence in your life, how you can move forward with your life. You've taken the first step to freedom, to becoming a MGTOW. At least I hope you've taken that first step, which is a big step. However, let me give you a bigger step. A bigger step is becoming financial free. Financially independent, because you don't want to be working till you're 70, I presume. Moving on to today's topic, how to stop being an investment sucker. Again, this is a continuation of some videos ago that I did about some money myths and financial industry myths and that type of thing. You know, when I was a kid, back in the mid to late 60s, there was a show, a television show, at least it was in reruns at the time, called Lost in Space. And there was this robot. It's very popular. And he used to always say, warning, warning, Will Robinson, warning. I want you to listen to the phrases that I'm going to be using here, because these are those same warnings that you need to be aware of that saturate, unfortunately, the investment media. And when I mean the investment media, I'm talking about just commercials on television, commercials on YouTube, as I'll talk about in just a minute, magazine articles, magazine ads, just that you see. It's insidious in terms of how these things keep cropping up, and inevitably, they're trying to do one thing, which is manipulate you. Remember, I've mentioned this before in the past. There are two things that run the investment markets: fear and greed. That's it. Fear and greed. With that said, one phrase that you're going to frequently hear, and that I just heard on a YouTube video yesterday, was the following phrase, quote unquote, risk-free return. And funnily enough, this YouTube video was talking about an investment in this quasi-Bitcoin investment. And they were using that phrase, risk-free return. Well, that certainly is not something that I would ever use when I'm talking about Bitcoin as a risk-free return. As a matter of fact, I can think of almost zero investments that I would say are a risk-free return. I guess arguably, unless you're talking about like a government bond or something like that, and I'm talking about a G7 government treasury bond or something, you could argue that gives you some sort of risk-free return, at least on a nominal basis. But the point is, gentlemen, if you hear the term or you see the term or somebody starts talking about a risk-free return, you immediately should start thinking, danger, something's wrong here. I'm not sure about this. I think I need to think about this. Another one that you're going to hear, another phrase that you might hear, and it's not so much of a phrase as it is so much of a concept that they'll throw out there, how it's easily done. This is easy money. And this example has come up many, many times in my life. I used to, years ago when the direct mail industry was big, when I was involved in various types of investments, I used to get direct mail advertising. And to take it a step further, I just got an email about this, about a solicitation for this, where it's easy money, it's easily done. Whether it be, here, buy this software package, and when the stock is going up and the light flashes green, you buy, and if the stock's going down and it's flashing red, you're going to sell or you're going to short it. Or another example, here, buy this investment newsletter and you can make all this money and it's easily done. You just follow the buy and sell suggestions that they give you. Again, warning, Warning, Will Robinson. Be very careful about this easy money, easily done type things. Those types of advertising, that type of advertising, of course, is playing on two things. One, your greed. Two, your fear. Your fear of, I'm going to miss out on this fantastic opportunity. Greed, hey, this is easily done. Anybody can do this. Unfortunately, it's too easy to happen, and I don't mean, no pun intended, but it's very easy to happen if you are struggling financially to get sucked into that type of, it's easily done, and I just give them $1,000, and I'm guaranteed to make $100,000. So let's continue on with another phrase that I've heard often, and this one goes back decades, probably hundreds of years for that matter. This time is different. This phrase is one of these old hackneyed phrases that's been kicked around where the reason why this investment's going to do well into the future is because, quote, this time is different. The reason why the internet stocks are going to continue to explode is because, quote, this time is different. If anybody says that or you see that in print or whatever, again, be very cautious, be very wary, be skeptical. Because you know what, gentlemen? This time is not different. It is not a cliche to say nothing is new under the sun. This time is not different. Markets go through cycles. Things go up in value. Things go down in value. I don't know what's going to increase tomorrow in value, and I don't know what's going to decrease tomorrow. It's all a matter of odds. But to say that this time is different and that stocks will always go up, or I used to hear back in 2004, 5, and 6, housing prices always go up. They never go down. So many people ridiculed me when I wasn't buying a house then. And those same people, at least some of those same people, ended up having their homes foreclosed on because they ended up losing a lot of money. Another phrase that you hear a lot, and in particular, this seems to be around the mutual fund industry or with investment advisors, is a, quote, proven track record. Oh, this person has a proven track record. Or look at our 10-year track record. One of the best phrases, one of the best things that the United States federal government, I think that they've ever done as a service to humanity is the following, that they've popularized this phrase. The phrase you need to remember is, past performance is no guarantee of future return. Past performance is no guarantee of future return. Just because someone has done well with their investments for the past 10 years does not mean that on year 11 that their investments are going to continue to do well. This type of line of thinking, this type of idea that, hey, this guy's been doing so well year after year after year, it's just going to continue into the future is wrong. It's been proven wrong many, many times. Let me just give you a quick example. There was a guy named Bill Miller. He was a major serious mutual fund manager, investor, and he was sort of the king of the mutual fund industry during the mid to late 90s going into the 2000s. For like 10 or 12 years, this guy was on all the magazine covers. He was quoted all the time. He had consistently beat the S&P 500, which was an extremely unusual type thing to have happen. Where's this guy today? He's a nobody. He's nowhere. He's less than the bottom of somebody's shoe. You know why? Because all of a sudden, year after year after year now, he's not been doing anything. He's been costing his investors money. He's been losing money consistently year after year, or at least underperforming the S&P 500. The point being, many, many times, I'm not saying all the time, but many, many times, quote, proven track records are due to luck. Yes, there are exceptions. Warren Buffett's track record, frankly, is not due to luck. I am not Warren Buffett. I'm going to hazard a guess you are not Warren Buffett. I'm also not Babe Ruth. I couldn't hit a baseball like Babe Ruth. I'm not Michael Jordan, etc. There are extraordinary individuals who can have extraordinary proven track records, but those are way the exception and not the norm. Another phrase that you need to be very cautious of is when you hear a guaranteed X percentage return, where it literally will say in writing, guaranteed percentage return. For example, I saw a real estate development recently where it said guaranteed 10% annual return for 10 years. So in other words, if you do the math here, effectively what they're saying is you will more than double your money. You will more than double your money at the end of 10 years. And that was due to this vacation real estate development type thing that they were pushing. Quite frankly, it was total warning signs for me. I don't believe in guaranteed X percentage returns that are far above the typical norm in today's marketplace. If somebody says to me, hey, look, I'll guarantee you a 4% return, 5% return, I'm not going to be very excited, but you know what? I'll accept that that's okay. I'll accept there is a possibility you could guarantee me, at least for some period of time, a year or two, a 4 or 5% return in today's marketplace. Because the reason why I'm saying this is because the quote risk-free return today is in the low 2% range. So the point being, when you've got high returns, or at least higher than the average returns, a la 10% in today's world, you need to be very, very cautious. And you need to be saying, something's wrong here. And I'm not sure if this is a very good investment. And maybe I'm better off to just sit on my money, even though it may not be earning me anything, but just sit on my money and wait it out. And hopefully a better opportunity will come around. In sum, let me just say the following. Guys, it's very easy to be sucked in and manipulated into these types of, I don't want to say they're get-rich investments, but to get sucked into this idea that it provides you a glimmer of hope that, hey man, if I can come up with $3,000, I can turn it into $30,000 in a year and that type of thing. And millions of people, if not tens of millions of people, are being sucked into this type of thing, even very sophisticated investors. It's amazing to me. Think back just some years ago, there was a guy named Bernie Madoff. You may be familiar with him, at least Americans probably are. This was a guy, a major, significant money manager in the United States, fantastic track record, multi-millionaire, and he was getting tens of millions of dollars, some very sophisticated investors, very, very intelligent people. And this guy, Bernie Madoff, what was he doing? He was running a Ponzi scheme. It was a pyramid scheme. In other words, as he was taking money in, he was paying out those early investors to make sure that they continued to put more money in. It was just, it was a joke. There was nothing there. It was all a bag of wind. It was all hot air. And the guy ultimately is, you know where he's at today? He's in prison. So my point is that even the most sophisticated, smartest person can get sucked into this. So just be careful. Be extremely careful. When you hear these phrases, risk-free return, easy money, this time is different, proven track record, guaranteed X% return on your money, be cautious, be wary, and do your research. No matter who's saying it, no matter how sophisticated they sound, no matter how logical the arguments are, be wary, be concerned, proceed cautiously. Gentlemen, as usual, thank you. I want to finish, of course, by saying we are building a MGTOW army of financially independent men. And because we're going to move this forward, I need you to do me a special favor today. I need you to go into the comments section and put a topic that you want to have discussed on this channel that's specifically financially related. I'm not going to do interviews, and the reason why, one specific reason why, is because I try to keep these videos relatively short to the 10 to 12 minute range. But put a topic, please be specific. As always, thanks again, John Galt, out.